My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people want to make friends? I'm just trying to save you some money. My job is not just to entertain, but of course it's to teach and educate. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. Yeah, the stock market actually tried to bottom today, but it failed the first time around. We were dragged down by the more powerful bond market. For a late-day bounce, erased a big chunk of those losses. Dow only sinking 357 points, S&P falling 0.82%. But more importantly, I think NASDAQ actually managed to advance a basis point, a stunning comeback. But let's not get too carried away. It was still the worst week for the averages since the financial crisis. Now, you got to understand the bond market is bigger than the stock market. We don't talk about it because it's boring, but it is very important to the direction of your portfolio. Everything's wrapped up in bond yields. Always has been. I learned that 40 years ago. There are multi-billion-dollar programs right now that sell stocks whenever those yields go down. It's formulaic, and they buy stocks whenever the yields go up. And today, those yields went down hard. Benchmark 10-year Treasury got as low as 1.12% late today. We're closing at just 1.16. See, that's a record low level, signaling that the economy is growing weaker, and there's a real flight to quality as investors hide their money in fixed income, coronavirus, supply chain. In other words, the bond market's screaming that the coronavirus is far worse than most people realize. Global commerce will take a real hit, and it might even be something similar to 2008 when all hell broke loose. Now, I can't tell you whether the bond market's right. I'm not an epidemiologist, but I know the market. So let me give you the game plan for next week. Given how this outbreak has played out, it's very likely that there'll be more cases come Monday. There'll be a lot of bad news. It'll be the headlines. I know that. It doesn't matter. It may not affect the stock market as much as you think. But you know what? It could affect the bond yields. We got to watch. If that's the case, the stock market will indeed get dragged down again on Monday. However, that could finally set us up for a snapback rally on Super Tuesday if Joe Biden, liked by the stock market, does better than expected in the 15 primaries and caucuses that happened that day. It's looking like Biden could run away with the South Carolina primary tomorrow, and that may give him a little momentum. He needs to turn things around on Super Tuesday. But remember, as far as Wall Street's concerned, anything that keeps Bernie Sanders away from the nomination is good news. And no, Wall Street does not feel that if Sanders gets it, it's a shoo-in for Trump. They just feel like if Sanders gets it, it's dangerous, okay? So if we get an all-encompassing down day on Monday with more coronavirus clusters, more sick people, maybe a world leader or a celebrity getting sick, that might get us to the point where the market's totally oversold, even more than it is now. And that would create some buying opportunities that are a little more lasting. If you don't have any cash on the sidelines, stay tuned. I'll tell you exactly what's still worth selling, and there are, particularly after today's bounce, at some levels to raise capital. Now, there's not much in the way of earnings on Monday other than Tilray. Remember those guys? That's a Canadian cannabis company. The whole ganja group's been put through the meat grinder. Tilray's in particular a nightmare. Stock was briefly at $200 in 2018. Now it's $14. I think a respiratory pandemic may be bad for business, but let's see what they have to say. Tuesday's retail day. So prepare to be underwhelmed because this is not the environment for retail. We hear from Target, and their holiday season was a severe disappointment. Will this number show a change? Tough to tell. You know, they have a lot of private label clothes that are made in China. That could cause a problem. Hey, speaking of disappointment, that's what I expect from Kohl's. Serial disappointment. Always the possibility that it won't be a disaster. We could get a big move. Wouldn't that be something? Then there's Ross Stores, the off-price chain. Well, that could be a bright spot because remember what I said. You're either online or you're off-price. I bet it can hang in there because these off-price chains tend to thrive in a weaker economy, and the bond market says that's what we're headed for. I like tech. Particularly the software as a service stocks, because they have real growth no matter what. We're going to hear from one of my favorites. It's going to be the big tell for the week. It's called Viva Systems, where they make software for the pharma, biotech, and life sciences industry. If Viva rallies, you can expect it to breathe new life into the whole cloud cohort. Not that it did so bad today. See, Workday, the cloud stocks have been acting terribly until today, and many of them had excellent numbers. Maybe they can continue to go up if Viva does well. Finally, Chevron has an analyst meeting on Tuesday. And let me tell you something. As my late mom would say, this group's from hunger. On top of the fact that the price of crude has been hammered to $45, more and more money managers are turning against fossil fuels. Universities are divesting stocks. By the way, it's not just young people worried about climate. It's BlackRock, $7 trillion, largest asset manager on earth. Maybe there's someone bigger overseas. Hey, Wednesday morning we hear from Dollar Tree, and their last quarter wasn't up to snuff, and I was disappointed. I'm not sure they can turn things around in 3 months. Hey, how about Campbell's Soup? This is interesting, right? Are people stocking up to prepare for the inevitable, as I was and my wife was yesterday? Canned soup makes a ton of sense if the coronavirus becomes a full-blown pandemic. So I think their outlook should be bullish. It's not that well run, but the new guy's better than it used to be. From there, Brown-Forman, the liquor company you know as Jack Daniels. Hey, you know what? That might be a tonic that helps people navigate the newfound volatility. After the close, we got a couple of really good ones. We got Splunk and we got Zoom. Splunk's a fantastic cloud-based analytics and cybersecurity play with a consistent track record. Zoom is a video conferencing software outfit that's become the hottest stock in this market because they make it easier to work from home. I love Zoom, but I will tell you to wait for a pullback. And, hey, you finally got a big one. Boom. All right? This one is probably my favorite next week. Let's put it this way, if it goes down by it. Thursday morning, Kroger reports Warren Buffett recently took a big position in the supermarket chain. I have no idea why. It didn't seem like he did either because he's got a lot of fund managers underneath him. Next up, few companies are as reliable as Burlington Stores. That's the old Burlington Coat Factory. This is another terrific off-price chain. I got one in Brooklyn. It's really kind of interesting. I bet the numbers will be excellent. After the close, we hear from Costco, one of the most reliable companies out there. I expect great results. More important, I think you might get a solid outlook. Remember that when we went out there in Washington? Hey, you want reliable tech? How about Cramer family fave Okta, the digital security firm run by Todd McKinnon that reports after the close? I expect good things. What a secular grower that is. We also have analyst meetings from AMD and Teladoc. AMD is up very big today. Now, the former had been one of the hottest of the hot chips until we learned it might be in a dogfight with a renewed and resurgent Intel on some new processors. I think Teladoc's becoming the preferred way that hospitals diagnose people by video chat, which seems like a good fit in this environment. We got an Exxon meeting. Yep, just like we had the Chevron. Exxon yields nearly 7%. That's astounding. Exxon was always viewed as the king of the energy space, best balance sheet. Nobody cares anymore. Remember, Wall Street keeps turning against the fossil fuels. Younger money managers believe this is a doomed industry. Incredible when you have teenagers and then they become in their 20s and they don't like this group and they're doing the junior work at these hedge funds and big funds. They don't like them. Finally, on Friday, we get the Labor Department's non-farm payroll report in. If it shows any spike in unemployment, we could have another meltdown on our hands. I don't think that'll happen. Unemployment tends to be a lagging indicator. But if it does, you should be ready to be able to, I told you to have that cash. You might want to buy into that sell-off. Still, if a lot of companies are already cutting back because of the virus, that will be visible in the numbers. Bottom line, get ready for another rough day on Monday because I expect more COVID-19 shoes to drop this weekend. And I know I was happy that I said buy it during Squawk on the Street and had a nice rally, but I'm realistic. It's just a nice rally. You got to be ready for a snapback. Real thing, though, if we keep getting so negative. Brian in Florida. Brian.
Mr. Cramer, good evening.
Good evening to you.
I need a coaching session on DuPont. Will demand for protective apparel add points to the board, or should we DuPont this one?
But there's nothing there. That's there are many businesses that company has, and almost all of them are not working right now. It only yields 2.8%. I'm glad that Ed Breen came back. He's a terrific CEO. But we need to see that stock, believe it or not, lower. And it'll probably get there. Hey, how about we go to Umar in New Jersey? Umar.
Hi, how are you, sir?
I am doing well. How about you? I'm
good, thank you. Hopefully you can help me out with this. Unfortunately, I got into Tesla at its all-time high. At 914 is my average, 94 stocks, losing 22 right now.
Right.
So I need your advice as to what to do.
All right. Well, remember, we don't care where stocks. We don't care where stocks came from. We care where they're going to. Obviously, your basis is a corrupted basis, but I think that the stock at 600 is a buy, and then maybe you buy some at 400. You got to work that basis down. That's what we do for the ActionAlertsPlus.com club. When we get in a little, we're a little too enthusiastic. I don't want you to fret. I think you'll be fine. Ken in New Jersey. Ken.
Hey, Jim. What's your long-term outlook on 3M, given the recent low stock price?
I'm worried about PFAS. I'm worried about PFAS, meaning I'm worried about groundwater. I'm worried about their exposure to China. I'm worried about what they have in healthcare that's not doing that well. As a matter of fact, candidly, other than the mass business, I'm worried about every business 3M has. All right, I'm expecting Monday to be another down day. Got to be prepared for it. Then we can rally. Mad Money tonight. Can we separate Clean Harbor's moves lower this week from the overall market carnage? Or will pressure on oil continue to drive that one lower? And is that right? Is that correlation correct? I've got the CEO of the hazardous waste management company. We'll answer that question. And stocks just had the worst week since the financial crisis. Why I'm putting my money to work today and what I'm shopping for next week and what I'm selling. That's for the trust, of course. And as global growth slows due to coronavirus concerns, is it time to circle back to the cloud stocks? I'm eyeing one of the best, Symbol Team, Atlassian, to see if it could maybe be worth buying. Stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
We are trying to make sense of things for you here tonight in the face of this incredibly difficult but panicky tape. I like to buy hysteria, not sell it. I like to buy panic, not sell it. We don't advocate panic because it's not a strategy. There are two kinds of companies in the blast zone. The ones that are at risk and the ones that are really at risk. What bounces best? That's what you must be thinking about at this point. What a day. We have your back and we'll get through this together.